As one of the oldest listed REITs, UDR has its place secured in history. But this is a company that is focused squarely on future growth. Here to talk about his company's strategies is President and CEO Tom Toomey. What areas do you expect to drive growth going forward?
I think first is always focus on operations. I mean, we're in a business that delivers 68% margin, and the better you get at it, the more capital is going to flow to you so that you can invest. So the second is going to be investments. And the range of investments going to be primarily to start with acquisitions for redevelopments. It's going to be acquisitions for markets that are trying to rebound, somebody that's going to look at it and say, I can operate it better than the last guy. And then I think the third phase of that, which probably won't happen much in 2010, will really be will be investment in new development.
Are there specific geographic markets you're targeting?
Well, we certainly have, with a company focused on 20, have our eye on all of those markets very well. Given where the cycle is today, I think that the acquisition opportunities for us are probably going to be in Boston, New York, D.C., and Baltimore. Your value investment will probably be out west in Southern California. Your redevelopment probably investments will be in Florida and some in Texas.
Development has played a key role in UDR's past, but obviously the development markets are challenging at this time. What are some signs that you're looking for in terms of when the development pipeline will get ramped up again?
Well, you're starting to see them right now, particularly in D.C., where you have a period of NOIs look like they're starting to turn up, that assets are trading at call it inside of a 6 cap, and you could build to a 7. And so you're asking yourself, does it look like a long recovery, good positive numbers here in D.C.? They certainly are. And second, you look at the price of assets trading, and if I can trade 100 to 150, better return out of development. Costs have come down, rents have stabilized. It's probably the right environment to be looking for. And so I think D.C. is going to be one of the first markets that people look for. The next will probably be around particular job industries that are going to recover, and we think recovery is probably going to be led by technology again.
2009 has been described many ways. How would you sum it up in a word or two?
Volatility and opportunity. I think people that really looked at the market and will look back on their career at it will realize an extremely volatile period of time, but there was a lot of opportunities born at it by people who were prepared for it.
And if I ask you this question again in a year, how do you think you'll have summed up 2010?
I think it's going to be a year of patience. There's a period of time where everybody coming out of a recession is anxious to get back to work and wants to get right back to where they were before they went into it. And what history's proven is to be patient about these recoveries. They're not going to happen overnight. It's going to take time for businesses to heal, balance sheets to heal, and for people to get back out there and start hiring again. And so 2010, probably the watchword would be patience.
Thanks, Tom. For REIT.com, I'm Matt Bishar.